The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Tuesday, the 9th of July. We're looking at the Dow. So this is very interesting because the Dow, yesterday the Dow it was up over 200 points, well up, and then it came all the way back down, went negative, and then it closed down just a little negative. But the S&P wasn't as strong. It was good, but not as strong as the Dow. Today, you've got the Dow much weaker, and the S&P is holding well. It's up 8. But this is going to be an interesting period because, as I said to subscribers to my opening call this morning, the market's starting to struggle, and the rotation that we're looking at is suggesting that we've got to be a little careful here. We're getting to an area that says we could be ready for a little bit of a digestive phase, and that's what I'm looking at here, but I haven't done anything about it other than to look. Let's just go through this. The Dow spiked higher. Not a good candle because it went to a high of 39 right there. That was yesterday. It went to 39,357. That was the leg D that was missing. But I do not like I don't like to see a leg D that goes to a peak D underneath the previous peak D. I like to see a breakout of that previous high in a leg C. So it says you've really powered through that previous resistance. Now you're looking at a fresh kind of start because it's open territory to the upside. This says, I didn't even have enough strength to break to a new in leg D, let alone C, to that 40,077 level. That just says to me, there's momentary caution. It looked pretty good yesterday that there was going to be a rally to leg D. Now, this is fascinating because the Dow Diamonds only went to a D about 10 sessions ago. And then it went to an E yesterday, 396.73. It's down right now. And the weekly chart, this is what I've been discussing. And I wondered if there was a possibility that was going to change. There is still time for it to change. But I was not happy with these candles in the weekly chart struggling. This is from the low that was made after that peak E all-time high, and then you pull back on the week of the 31st of May to 38,000, or that round number low, almost round number. And then it took 1, 2, 3, 4, 5, we're in the 6th week, and we haven't even gone back to that high, using up time rather than price. That just says to me there is a rotation going on. The rotation says you're still focused on the high techs and the techs, but the rotation that said that it went to different areas, those areas are becoming much more selective. Yes, it is. You're starting to see some stocks that were really lagging, like a Shopify having a pretty good move up until now. But that it needs to continue, and it needs to go through into the IWM, the Russell 2000, which so far it hasn't done. It looked like it was about to, but so far it hasn't. So the Dow's down 158. The S&P is trading. Oh, I just typed it in the wrong place. Let me do this. There we go. S&P is trading up 10. It's still holding very well, and that's the thing we saw yesterday. The Dow was really good, and then the S&P was okay, but it wasn't as strong. And today, reverse rolls completely with the Dow down. Now it's 170 at and the S&P is up 9 at this particular point. So all-time high. Leg, I've got this as an F in the daily, an E in the weekly, and an E in the monthly, gone right into the Chapman Wave inside track repellent zone in the weekly chart. That says to me we're getting close to some kind of area of persuasion. Either we're not able to break into the 6620 area, or this is the area that says, whoops, we up and away. But to go up and away, you really need the Dow and the Russell 2000 and some of the other areas that have been somewhat weak. Okay, now let's go on. QQQ, NDX 100, all-time high, trading up $1.92 at 499.25. Look at the SMHs, the semiconductors. Semiconductors made an all-time high of 279.57 on the 20th of June, and are now trading at 277.61 was the high of the day, so we're 2 points away from another all-time high. And the weekly chart, this is going to be interesting. Almost all the charts that I looked at in the weekly said that high that was made in most of the charts March and April, that was a high, and that this move that we've had now is basically the start of another big move to the upside. If that's the case, then this could be, if we make a new high in the semis above 279.57 by 1 point, there's a chance that we've started a new breakout in the weekly chart, and that would be an amazing thing, really would be. So, in the meantime, back at the ranch, I was thinking that there was a chance today that we have a 2-click session. The Dow is really saying, are you kidding? How on earth can we do that? Well, 2-click session, that is in the E-mini. And look, let me just show you something here. Right here. So on that pullback, almost towards the 200-period exponential moving average, let me just go. I wanted to finish the cup formation. No, I'll start it off from earlier this morning. So that move that was right there in the base of that long rectangle. Look at this overnight. For those of you who trade the futures, remember in the S&P, it happens so often that at the end of the day, usually at 4 o'clock, but here it was a little later than that, you can start a narrow rectangle formation that still has the Chapman wave notation possibilities, but it can last a lot longer than your patience. And look, this is a range between 56.32 and 56.39. So let's call it a 7-point range. A 7-point range for the futures, they can move 30, 40, 50 points at a time. So this says to me that right here, we're stuck in the rectangle. We're trying to break to the upside. If we can start trading above this trend line right here, in other words, I'd said in the den, I typed in earlier on that 56.32 must hold as support. But most importantly, it's the 56.40s that needs to be visited by the E-mini, and then make it your home. It has to stay there for about an hour or so, and it just can't do that yet. But that was the possibility that in the 10-minute chart, this becomes a, peak B, and that there would be a C and a D, so that it could become a 2-click session. That's asking a lot in a market that is really struggling with the down 172. That's a struggle. But as I said, it's rotational, and that means money is. Oh, that's the other thing I wanted to discuss. When markets are like this, unless you're in stocks like an Amazon or a Microsoft or a Meta or a Google, it's really tough to know what to do for money managers. So I can see the confusion here, and it isn't so much confusion, it's what do I do next? That really is the issue. Because when you get this kind of whippy action, but it's so selective that if you aren't in those special stocks that are making all-time highs, what do you do? Because the others aren't participating in the same way, it makes it very difficult. That's when you get Dartfish Day. A quick move, stop. A quick move, stop. Change of direction, stop.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, we're back, and the Dow's down 180, S&P's up 12, so it's showing resiliency, and I like that. So we're looking at the SMR. I had a question about it, nuclear power core. We did work on this a long time ago. It was one in the nuclear area. It's one of those that's really shown absolutely stellar strength, and I like this. It's making a potential PD right now at SMR is the symbol. It's at 1284, down 85 cents. But my target would be 1385. I would say I'm going to give it a little time. I know it's only a point away, but I'm going to give it a couple of weeks. I'm going to say in July, there's a real good chance that it hits the 1385 high of August of 2022. Now, there are others. For instance, we have a long position. It's done very well. It's taking a bit of a breather right now. And if you go to so that's nuclear. So if you look at URNM, uranium ETF, the Sprott uranium miners ETF, it made a peak D in the monthly chart. It made a peak E in the weekly charts, making a U-shaped pattern that should go to a double U. In other words, the second U is unfolding. And look at the way it's sitting on the 200-period moving average, trying to build some kind of trampoline strength to be able to power higher. Its URNM is trading at 50.34, up 79 cents. But it needs, I give it the whole of July, the rest of July, it needs to start trading. It can't just pop once. It needs to trade in the 53.80, preferably 54.20 area, sometime to say, I'm out of that range. I'm done with the 48s. But if it starts to trade under 47, that says, I'm going to make a deeper U-shaped pattern and come down. The chances are we might have to test the 45 low that was made 44.91 back in March, the week of the 15th of March of this year. And the 9-period moving average in the weekly chart has gone pink. So this is really a leader in the field. It's a fantastic move. And if that's CCJ, let me go to CCJ. Yeah, it's even looking better than CCJ, which made a peak D around about the 56 level in June, and is trading now at 49. And the weekly chart has pulled back, and the monthly chart's got a peak E. Yeah, this is a leader. So stay with it. Congratulations. The other one was TIA. TIA. No, did I really? An EOM. Oh, those are thank yous. Yes, so let me just do this one more time just to finish up, because there's one other aspect that I wanted to mention. Support. Support is at 1193, the 9-period exponential moving average in the daily, and 1134 in the daily 14-period moving average. I would just say that if it closes under 1220, then you've got to be a little careful, because then it's probably going to have a bit of a digestive phase. And those are your key support levels. And then moving along, a question came in about Amazon. So this is going to be interesting. Amazon's trading just off its all-time high of yesterday. It's trading at 199.98. This is 200.43 was the high today. Yes, and I've been looking for round numbers, because you remember we had those fantastic round numbers in all the semiconductors before they had that massive decline. That's for the SMHs. That was in April, May, I believe. Let me just see here. So this was yesterday. The high was 201.20. If you're looking at Apple, I'm just looking for round numbers. Apple is trading at an all-time high today. 229.40 is the high. It's trading at 229 right now, round number. That's just a brief moment. That's a peak, a leg D in the daily, a leg C. It's still very powerful in the weekly, and a leg C in the monthly. That's still really strong. Looking at Apple. Oh, we'll go to Microsoft. Microsoft, I'm anticipating a bit of a pullback. Yep, there it is. Down to at 463.81. It made a peak E yesterday, confirmed. And that E went to right there. I don't know if I think I have to change that. Yes. So that's on the 5th. It went to 468.35. Let me just type that in. 468. And that's the reason why I'm saying I think we're getting a little. 468.75. I think that's what I said. 175. That's where I got the 5 from. Let me just check. No, I think that was wrong. 35. All right. So as I'm looking at this now, I'm just suggesting that we're getting a little toppy in the short term. And yes, the weekly chart has this stork leg formation. This is the neck. I can talk a little more about it. So this is a pattern that we look at where there's a long move up that I call the leg. Then there's a definitive oval pattern. It has to be an oval pattern. It can't be anything else. It's an oval pattern. If it's a rectangle, it has a different connotation. If it's the oval pattern, then a break above it usually goes to a D, or then the move up could go to a D or an E. But what happens is when that comes down, it should come down sharply enough to test the arch high. In this case, the first one is 433.60, and the next one's 431 in the 431s. So that is a 30-point decline. That's 8%. I don't know what's going to do that at this particular time. I think we're getting close to it, but we haven't yet got there. So that is Microsoft. We are still long from 338. We're not doing anything, not yet anyway, in terms of any short position. Now let's look at something else. So within the context of those stocks, you've got Netflix. Netflix has gone to a peak C. It should try to go to a slightly higher high, but it's getting close. Look, the 9-period, it's walking the 9-period moving average, but each pullback, each rally has quite a deep pullback. So that's just something to monitor. In the meantime, back at the ranch, you've got something very interesting here, and that is Meta. There it comes. Meta is trading at 533.01. What was that TWSM? That was a mistake. Can we just get rid of that? Remove. Okay. And I need to mention just right now that this move that we were looking at in the E-mini has just taken out that 200-period moving average. So now the weakness of the Dow is filtering into the S&P because the S&P's pulled back. It's still up 6. It's still pretty good. But at the same time, you're starting to see weakness now in the IWM, the Russell 2000, corresponding to the Dow. And that's why I'm saying now I'm getting a little cautious on what we're looking at, because the topping formation that we were looking at here with Meta, look what happened. It did a beautiful cup formation. I've drawn this in, shown this a number of times, that there was this beautiful cup formation, and that if I used this little tiny candle right here as the midpoint for the plumb line, it went 3 days. It's 4 days late. Well, it was 1 day late in getting to the 531.49 level, but then it did it and it broke out and it went to a new all-time high, which is leg C in the monthly chart. But at the same time, now it's just starting to stall a little bit. And that's the reason why I'm saying, I'm looking at this and I'm saying, we're just starting to see a little hesitancy here, and that hesitancy could translate to some kind of a pullback. I'll be back in a moment.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So the other day, I got an email suggesting Robert Half Inc., which is staffing services consulting firm, making lower lows. Where do I think it could go? Well, the 200-period moving average in the monthly chart is down at 55, and it's trading right now. It's 62.75, down $1.53. It made a peak D in the weekly chart way back in 2023. I think it was December. It made a peak F top way back in 2022. I believe it was maybe February or so. And that was up in the 120. Well, I should have typed that in. 125. Wow. 125.77. February of 2022. Wow. Feb 2022. Yeah. So that, and it's come down, and it's almost at lows. It made a low in the 61 area about 3 weeks ago. Tried to rally to the 66 area. Now it's down to the 62s. This is an issue. This is an issue because it's talking to a very important part of the market, which is the staffing. And if you look at this, jobs must be really easy to come by. And maybe Robert Half doesn't have, maybe they're not exactly with their old-fashioned firm. Maybe that's the case, because that's what it looks like right here. Because surely any medium that's using the internet the way it would function for the younger people who are so used to using the techniques available in a split second, it's not even, they don't even have to think, it's their language. It looks to me like jobs, jobs are a little bit more plentiful than they were some time ago, but at the same time, there's a way of going for them, looking for them, and the type of jobs. So I think this is maybe this is not really the benchmark you should be using, Robert Half. There are others. Now, I'm trying to think. Mankind? No, Mankind is M-A-N-K. That's a biotech. It always sounds like it should be. No, Mankind is really one of those. Yeah, Mankind is the Mankind Corporation, specialty endocrine and orphan drug lung disease. This is not jobs. Okay, obviously they have got jobs because look how nicely it's done. Trading at $5.31. One of the stocks that we do follow. I just completely forgot for a moment there. Mankind. It always sounded to me like it should have been some kind of a jobs thing. But anyway, Mankind, that's what it does. So that wasn't the one. Now, another question came in, and that was, so I was asked yesterday, and I can't remember what the stock was. Maybe someone can remind me. I spent a whole bunch of time on it, and I think I took it from the chat, from the Tiger Den. And what were we looking at? And I said, if buildings are having a tough time, oh, that's right. It was, now remember, it was to do with, I'm going to forget. That was a question in the Den. Maybe I could find in the YouTube. Oh, I can't find it. Anyway, I was relating that to Toll Brothers, and I was saying, until there's a really strong change in the rates, I think that these home builders are pulling back, and the stock that you were looking at was directly related. And I said I would wait. Did I write it down? I think yesterday I forgot to write that down. I'm going to try to find it. Whoever asked me, let's just look at that again. But this is the Toll Brothers is trying to find a base. But I did say I think the 106 level, which is a 200-period moving average, will be hit in July. And that's kind of what I'm still thinking. But it is it's weakening because the weekly chart has gone pink in the 9-period moving average. That's a negative, right? And Lennar, same thing, went pink at least 4 weeks ago. And if you're looking at HGX, yeah, same thing. So, so I'm just saying that the areas that are contingent upon the success on the whole building area, and let's go to builders. This is builders. This is called the Builders First Source Inc. Building materials manufacturing. Look at that. almost like an Eiffel Tower V-shaped pattern, pyramid, straight up, straight down in the weekly chart. We spoke about this, even discussed getting puts on that, and we never did. Pity. And that just says to me that whole area, and that makes it even more important to be able to focus. And that's what I'm saying about this rotation. Now you've got a sector that was this was in demand, right? All the way through to early 2024. Now it's out. So that means that fund managers have to start putting that money, taking some of it out, putting it elsewhere. They're going to do that in the semiconductor area at some point very soon, I think, because that's the way rotations work. And what would happen, I don't think it'll be the same as the builders, but I do think that you'll get a trading range so that the SMHs, let's just say they go to the low 280s, right, in this particular move. I think the 280s to 250s will be the trading range just for a little while, and that'll be that digestive phase that we're talking about. Another question came in, could I look at PLTR, Palantir? Did I type that in the wrong place? I did. PLTR, there it is. So as I'm looking at this coming out for the next, at least going into the rest of July and into August, I think there are going to be really good buying opportunities. I'm not sure that the stocks that have been the weakest are going to remain that way for much longer. Money's going to find its way. So Palantir's in leg C right now. I've got it. New recovery high. In the weekly chart, I'm calling this leg C in the weekly as well. So it should go to a D, and I would suspect just under in the 29 area, it's trading at 28.38 was the high today. I think it can get to the 29s, but then I wouldn't be surprised if it does a little digestive phase between 29s and 26, maybe even 25. That's the way I'm looking at it, right? Nothing wrong. I'm just saying it looks a little bit overboard based on the on-balance volume, but the stochastics at 90%, so I would not be thinking short, anything like that. It just means that it could take a little bit of a breather after it makes that leg D. Hope that helps. Next question came in. Let me just, I have to move this away because I moved that. Okay, we've got, oops, there it goes. Okay, so the next thing I wanted to look at was, right, there it is, the IYT. So the question came in, IYT has often been your benchmark. You like to see the IYT moving together with the Dow and the general market to high highs. Where is it now? It's kind of in the lower part of its range. It's trading down today 28 cents at 64.10, but it has not been able to get into the 66.50 to 67.30 area, which is really what's needed to say, hey, I have strength, and that's really market strength you're looking at. I'll be back in a moment.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back. Dow's now down only 108. I can see that the market's trying to come back. The S&P is now up 12. And we're looking at a round number. Thank you. That was who? That was who in the den? Said round number. That was Jeff. Yep, QQQ hit a round number 500. You know, I saw that earlier on. I wasn't going to say anything about it because I like the day to play out. Because if you get too excited about these things, they have a way of smacking you on the nose. You know, when you take your hands off the wheels to pat yourself on the back, that's when you hit the tree. That's the same thing here. So the day is young. It's at 499.00 right now. It hit 500 round number, the QQQ. I still see strength. I think it's going to go higher. So but you mentioned it, so I'm mentioning it. Yeah, I think that's something to monitor. Now look at this. This is very important. See the E-mini? Pulled back very sharply. It took out the low of 8 o'clock or 8:30, and now it's back again. And that's kind of what it does. When markets do that, it's as if there's a trap that's formed and that the players there are just really playing games. And that what they do is they try to take out stops. They took out my stop. Unfortunately, I thought I had a 2-click session here. I had a beautiful entry at 5632.50, and it was, ran all the way to 56, what was it? 56.40 something, 43, and then it gave it all back. So now it seems to me this could be the real thing. This is the one that starts the rest. You remember 10:20 in the morning? That's kind of when everything happened. Now what we're looking at is a new bunch of players. Now the market participants are a lot more serious in the sense that they say, okay, we're out the way with that opening gambit. Now comes the next part of the day, and it sets us up for a move going all the way to around about 2:15, and that's when they decide either they're going to get out of positions again, and they just intraday positions, or these are positions that they want to lock in and add to or subtract as you go into the last hour. So I think this particular move right now has the potential to trade into the 5640s in the E-mini, and that's going to be, if it can hold in the 5640s for a little while, you've brought in a whole new bunch of players. All right, so as that stands, let's just get back to what we were looking at. So I just wanted to see if there was any thing, my Chapman wave. Well, I haven't had any movement at all in my Trin gauge. Right now, the Trin is at 0.90. It's just telling me nothing. It's telling me the status quo is what it is, that the markets are just, there's a bias to the upside right now, and that's the way it is. Now, look at this. The 9-period moving average in the daily chart of the Dow is still very sharply green, way above and that just says there's still internal strength, and that you can see the Chapman wave automated resistance levels here. So, folks, if you are interested in my service, the opening call, I have all these different techniques on a Friday or Saturday. I have my overview, my weekend overview. It's about an hour long. It covers a whole bunch of things of what's happened, what we're looking at, and stocks that we are very interested in getting, and the prices that we would be looking at them. So as it stands right now, look at this nice rally that you've got in the Dow. This is the fresh start. Look at that. Look how quickly we've got almost back to the high of the day. Leg D in the 1 minute chart. This is now a leg A in the 5 minute chart. A. And it's a leg A in the 10 minute chart. Good grief. And that just says to me, this is not a market that you want to mess around with, thinking of the short side right at this particular moment. Not yet. We're going to get to that point. And the reason why I say that is when you have these intraday, when you have, like yesterday for the Dow, it was like 3 sessions. There was the morning session. Well, there was the early session, then the follow-up during the opening bell, 9:30, and it goes to a high, and then it gives it back, and then it struggles for the rest of the day. That tells me that within the context of fund managers, I like to look at it through this, and I'm not a psychologist, but having been looking and participating in the market for decades and decades, you kind of get a feel for at least what, if you're feeling it, you've got to say to yourself, others must be feeling it as well. And I got this feeling right now. For instance, we got stopped out of it, just a trading position, not even a 1% stop, but a trading position. And because of that, I'm saying to myself, that just means that particular area is really struggling. And that the areas that are working could continue to work for a while longer. But you've also got to be looking at what will change. So just for that, I want you to go to, I haven't had time to do this, I want you to show you this. Look, gold is up 3 at 23.67. Had a terrific session 3 sessions ago, a lousy session yesterday, Monday. Gave back most of the gains, not all of it. It was an inside candle, and today it's an inside candle, but it's only up 3. Look at silver. Silver's a different pattern. Silver, there it is, has broken out of the Chapman wave inside track repellent zone that was just there for ages. The 9-period moving average has turned positive. It's in a peak C. It should try to go to a D because the stochastic hasn't got to 80% at 79.03, but it's holding very well. The MACD is good. The relative strength is pretty good. And that 914 is cross positive. But the weekly chart, even though that's a peak E and this pullback said, wow, you should probably see the 9-period moving average decline. It is rallying together with the 14, and it's way over the 14. The MACD has got this M-shaped pattern, which is good. And the stochastic's the 1 weak link here. It's at 64% on balance volume. Actually, together, the two of them are somewhat weak. But the price is the price, and the price is holding pretty well. And that's just saying to me that even if you go to different sectors within, like that will be the metal sector, within the sector, you've got such a variance of what's working and what's not. And that's why I'm saying I think the stocks that are working best, at least for now, could remain the ones that are working best. So let me show you the GDX. This is the gold miners. Gold miners actually has a nicer chart than the gold chart, and so that's a change, right? That wasn't happening before. So gold miners at 36.07, down 3 cents, GDX. You can see 9-period moving average. I've drawn this in. There's a pattern that says if we can break above peak B, which was 3 sessions ago, 36.37, not just go to 36.38, but above it, then you've got this Chapman wave inside track repellent line all the way at 36.82. And that says you're on your way to retest the 37.87 level. And that makes the GDX, I was asked, where do I think it's going? I think it's making higher highs and higher lows. And that makes this area, which filled the gap, but the low of yesterday, which was 35.51, I'd say 35.30. is probably a close under 35.30 says, oops, have a little bit of a sideways move. But look at that. The weekly chart has got this beautiful U-shaped pattern. And now we talk about the Chapman inside track repellent zone. Look at this monthly chart that goes back to August of 2020. at 45.78. Lower lows, lower highs, lower lows, lower highs. And all of a sudden, it started to challenge the inside track repellent zone. I'll be back in a moment. The Dow is only down 89 right now. The S&P's up 12.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento on Friday, June 14th and Friday, June 28th this month for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryJune24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, so I was asked about ASPN, which is Aspen Aerogels Inc. Was doing fantastically from early May. It ran up from the 14 area up to the 31s, and then it turned around and now it's trading at 23.24. And what I'd said is must hold 21.70. That's the midpoint of this particular candle, huge big gap up candle of May the May the 2nd, and it needs to hold that. And in the interim period, if it does rally, it needs to hold the 25.50s. If it can get to 25.50 and hold, it means it'll slow down the rate of expansion of the pink 9-period moving average. But it looks to me like it's in a digestive phase. So this is what I need to show you. So the Dow, look, has come back a little bit. The Dow is now down 88. And it's not a big deal. The 9 over the 14 is still holding very well. I'm looking at this and saying it's used up so much time, and this is a sudden move for whatever reason, a big spike towards the 40,070, even 40,000, let alone 40,077, just even 39,500s would be really good. It hasn't done that yet. It's just stalling. If you look at the S&P, that's very different. The S&P making all-time highs. High today is 5586.30. All I can say is that 5588.66. Sorry, 5588. That is getting closer and closer to a breakout of the monthly inside track repellent zone. But what I am looking at here is there's this rotation going on, and it's just saying it's getting a little tight. That's all. It's not like it's a big deal. I can see some kind of a pullback. Maybe in the next few days we suddenly get a pullback, some news-related thing. I don't see a massive turn down yet because the 9 and 14s are also strong. But it is pretty selective. And that selectivity makes it frustrating to get into positions and hold them. So with that said, check out what we call my daily newsletter.